Ladies and gentlemen, welcome back to the channel. At the time of recording this video, Tesla stock is down about 0.5%. But in this video, we will be going over all of your Tesla stock news today, as well as your broader market news. And there is quite a bit of it. And September, if you haven't heard, is the weakest month ever for stocks. There's no comparison. September is uniformly a bad month. It's almost never a good month. Okay. And a day like today is prime example of September seasonal bullshit. Tesla stock is down today. It should be up today. You can't read too much into it. But you do need to pay attention to the news that is coming out, because once we get, it sounds stupid, once we get into October, November, December, all of this good news is going to come back and be positive catalyst to push Tesla stock dramatically higher, in my view, into year end. Now, we have a lot of broader market news as well. So hit that like button, subscribe to the channel. If you have not done so already, check out that link down below in the description of today's episode to join the best trading community in the entire world. Hands down. There's no competition. The trading community portfolio is up 101% year to date. Now, I think these returns are going to get much larger into the end of the year. But we are outperforming 99.9% of hedge funds and institutions. What we are doing is going out, finding small cap AI stocks that are great companies and investing in them before Wall Street understands the potential. Like a Palantir on IPO day. I bought that at $10 a share before Wall Street really understood what that company would become. That's the idea. Finding high quality companies before Wall Street does. That is where the 10, 20, 30x potentially life-changing amounts of money, I believe, will come from. Keep in mind, very important, I'm not a financial advisor, I'm not a financial planner, I'm not your cousin, I don't think, definitely not your father, not your uncle, not your grandfather. Do not listen to anything I say and think it's financial advice. It is not financial advice. I want you to contact a financial advisor before making an investment decision. What I offer is to learn the strategy. To, yes, if you want to blindly invest alongside me, be your guest, be my guest, but you will lose all of your money. That's what I'll tell you. You will lose all of your money, potentially live under a bridge. It's a little dramatic, but you get it. You got to invest in the companies that you believe in, that you understand. And it's your responsibility to understand that. So if you are not a jackass, feel free to come join us if you want to be involved with the best community in the world. With that said, let's get into today's episode. And a lot of people say, why do you shout yourself out in every video telling people to come join the trading community? And it's simple, because I sponsor myself. I've never once done a paid promotion. If you want me to start doing 60-second long paid promotions in every video, well, we could arrange that. Okay, as always, let's get into your Tesla stock news today. Here in news that actually came out yesterday, Tesla's first shipment of German-built Model Y vehicles has officially arrived in Canada. Now, Mercedes says their concept AMG GT XX EV achieved a maximum charging speed of 1,041 kilowatt hours during megawatt charging. It maintained that level for 2.5 minutes. The system transmitted 17.3 kilowatt hours in just 1 minute, which is the equivalent of 54 miles of charge. So this is important. You want this kind of competition in charging, because what keeps some people away from EVs is the fact that you may have to stop and charge it for 20 minutes at a time, 25 minutes at a time to get a full battery. People like the convenience of pulling up to a pump, getting a tank of gas in 3 to 5 minutes, and being on your way. So the faster charging gets, the better for Tesla, the better for everyone, really. Tesla China has shared a new video of the Model Y L showing how much cargo space it has, and honestly, it's impressive. Like 20 regular sized, cases here, and 25 briefcases, all fitting in the vehicle at once. That's a lot of space. Morgan Stanley's Adam Jonas on Tesla's new proposed $1 trillion performance-based pay package for Elon Musk. They say, quote, "In our view, it is a good deal for Tesla shareholders. While the proof is in the execution, at face value, the proposed compensation package aligns Tesla's minority shareholder interest with those of Elon Musk. Yes, $1 trillion is a big number, but it's rather modest compared to the size of the market opportunity. We have entertained scenarios where the humanoid robot market can exceed the size of today's global labor market by a significant multiple. Contemplating future global GDP before AI bots is like contemplating global GDP before electricity." So yeah, they're basically saying the opportunity for Tesla is far greater than Elon's compensation package. If Tesla executes and does well, the opportunity just with AI bots is magnitudes larger than this even compensation package. And if Elon is the guy that gets us there, then $1 trillion, it's not that much. Also in the news today, Tesla China delivered 57,152 vehicles to retail in August, and 26,040 units were exported. So this kind of compares to previous Augusts. Okay, in 2023, you had 84,000 total vehicles, 84,159. 2024, you had 86,697. And 2025, you have 83,192. Export is a little bit on the higher side compared to prior years. In 2023, you had 19,465. In 2024, you had 23,241. And in 2025, you have 26,040. So export is higher, retail a little bit on the lower side, but it all almost nets out. And well, so far you're at 515,552 vehicles in China. For 2024, you were at 916,660, and for 2023, you were at 947,742. Now, I do expect the next couple of months to be rather exciting because of the Model Y. We know that the new Model Y L is sold out for at least a month, and you're likely going to see a situation where Tesla is selling all of them that they can produce. The question really is, can Tesla, ramp the new Model Y L fast and meet these deliveries that they are receiving? In option activity today from hedge funds and institutions in Tesla, you have 69 different trades totaling $26.41 million with a positive order value of 56%. So a little bit more positive than negative, but it is a relatively slower day compared to what we're used to. Now, not with the shares short. You see today 2.2 million shares that are on net being covered. So you have borrowed shares of 638,000 and return shares of 2.8 million. So there's a lot of short sellers today that are covering on short positions. They do not want to be short in Tesla. Now, I don't know exactly why that is. We do have big catalysts coming later this week. We do have a Fed cut coming next week, and some rather interesting takes from institutions on what these cuts could mean for markets and what they could do for markets, considering it is September and you do have some seasonal weakness. But for whatever reason, short sellers are covering a lot of their short position today. You've seen this trend recently. Overall, over the past 3 months, the short interest is down 8.2%. It has risen a little bit recently. Again, heading into September, you did see a jump from about 2.5% short interest of free float to 2.83% short interest of free float, which doesn't sound like a lot, but it's about 7 million shares, 6 million shares or so, which 6 million times, $350 is a substantial dollar amount of an increase, right? $2.1 billion of an increase, right, in the notional dollar amount that is sold short in Tesla. And that just happened recently. But as we get further into September and hopefully a really bad September does not materialize, you will see short sellers begin to recover on those short positions that they took out in Tesla just to really hedge against the markets. I don't think anyone's really like going out and shorting Tesla because they're super bearish on the stock. I think we did see an increase in the short positioning because they use that as a way to hedge their portfolios, right? A way to hedge against a broader market decline, if you will. So seeing a lot of those shares actually get covered today is quite a bullish sign. In broader market news today, the U.S. Supreme Court allows Donald Trump to remove a Democratic member of the Federal Trade Commission. You can see on the broader market index level, the Dow is up 0.14%, S&P is up 0.32%, NASDAQ up 0.74%, Russell 2000 up 0.11%. The VIX is down about 0.25%. 10-year Treasury yields are down 4 basis points to 4.047%. So you're almost below 4%, which I think is a pretty big psychological level. Oil today up 1.31%, and cryptos generally moving higher. Ethereum up 2%, Bitcoin up 1.31%, Solana up 6.64%, Dogecoin up 7% today. Trump says we are waiting for a call from Chicago. We will fix Chicago. He says, don't know why Chicago isn't calling us. JP Morgan warns of Fed rate cut pullback. JP Morgan's trading desk warns the Fed's expected September 17th rate cut could spark a sell the news drop in U.S. stocks. Despite the S&P 500's 30% rebound in April, risks from inflation, weak jobs, tariffs, and seasonal September weakness remain. JP Morgan suggests hedging with VIX calls and adding gold, though market history shows rate cuts outside recessions can still lift markets. Basically, JP Morgan is saying, hey, we've already seen a bit of a rally in markets that once we actually get the rate cut, you may just see stocks sell off on that. Like, even though historically rate cuts during non-recession periods are bullish, the short-term reaction could be a negative one. And I think a lot of it is really going to come down to algorithms and, how algorithms take it. Like, I think the higher we go heading into September 17th, the more likely you are to get a sell the news event, especially since you are in a seasonal weakness period in September. For an example, if we do kind of trend higher in September and maybe go up 2%, and then we get the rate cut September 17th, you might fall 2%. Like, you might come right back down to where you were. I don't think, again, we're not going to get like a 10% correction or even a 5% correction on a sell the news event from a rate cut, right? But could we just lose all of what we gain heading into it? Yeah, it's kind of like if Nvidia or Apple or any other stock goes up heading into earnings, and then earnings are as expected. Like 9 times out of 10, that stock is going to come right back down again, but not collapse or not go through some kind of huge 20% crash. Trump says we would love to go into Chicago and straighten it out. According to the New York Fed, 1-year consumer inflation expectations were at 3.2% in August versus 3.1%. New York Fed says 3-year consumer inflation expectations are unchanged at 3%, and 5-year consumer inflation expectations are unchanged at 2.9%. So that's good that longer run inflation expectations are not going up. But 1-year inflation expectations went up a little bit. And according to the New York Fed, August credit access expectations deteriorated a bit. And according to the New York Fed, August survey found the worst probability of finding a new job since June of 2013. So really showing the labor market does not look good. And in August, the public saw a greater chance of losing their jobs. U.S. Fed to cut rates in September and once more this year, say most economists per Reuters. As of today, there is a 92.6% chance of one rate cut and 7.4% chance of a 50 basis point rate cut coming September 17th. So in fact, there's a 0% chance the Fed does not cut rates September 17th. The question is, are they going to cut by 50 basis points or are they going to cut by 25 basis points? Now, we do have some major economic data coming out this week. We do have the yearly non-farm revisions tomorrow, and then we have CPI later this week that's really going to solidify 25 or 50 basis points, right? That's the real question. If we get a really low CPI report and a high revisions over the past year for non-farms, you could very well start to price in a 50 basis point rate cut for September 17th. Now, for October, you're pricing in another cut with 82.8% chance, 10.6% chance of one cut, and 6.6% chance of 3 cuts by October 29th. And for December 10th, you're pricing in a third cut at 71%. So the odds of cuts in October and December are going to move a lot based on the economic data that we're going to get. But it's pretty much a certainty, unless we get some kind of crazy high CPI number, that we get a cut next week. Like that is going to happen. That's really not the question. The data will move the odds for October and December. That's what we're going to be watching for. Jensen Huang, NVIDIA's CEO, is expected to accompany President Trump on a state visit to Britain next week, according to Sky News. NASDAQ is working with regulators to introduce trading of tokenized securities. The Trump administration asks the Supreme Court to allow it to freeze billions in foreign aid. President Xi of China vows to maintain international economic and trade orders. JP Morgan says Fed is likely to cut 25 basis points, not 50 basis points. JP Morgan's Fabio Bassi expects the Fed to trim rates by 25 basis points in September, citing weak payrolls but still high inflation. He said a 50 basis point move is unlikely. Recession risk stands near 40%, though markets see only modest easing for growth risks. Bassi noted political pressure from Governor Cook's dismissal, but said Fed independence remains intact. If weakness is temporary, he sees a shallow easing path, limited risk asset pullback, and a stronger dollar. He thinks recession risks are 40%? No. That's a negative, my friend. And if JP Morgan says recession risks are 40%, that means there's a lot of upside for stocks. Now, from a technical perspective in Tesla, you're still grinding higher, okay? The technicals look really good, and I think you're ready for a breakout. It's going to be hard to get a larger breakout in September, again, just because the algorithms are pre-programmed to sell stocks, right? And for any reason, like almost no reason at all, stocks can be suppressed in September. Now, with the Fed rate cut, again, I kind of agree with JP Morgan. You could get a little bit of a sell the news kind of event following the first cut, especially if stocks do continue to move higher into that event next week. Like if the data is good tomorrow, if the CPI report is good, if stocks do move higher, don't be surprised to see a little bit of selling after the Fed cuts next week. But it's really just a part of the process. And you want to look past September as much as possible. Once we get into October, November, December, that's where things start to get a lot better from a seasonal perspective. And I think 2026 is going to be one hell of a year for investors. So let me know your thoughts on this down below in the comment section. We have a lot more to go over in the next video. Specifically, we're going to talk this September cut, what could happen to markets, what could happen to Tesla. We're going to talk about the economic data coming out tomorrow, throughout the rest of this week, and much more. Hit the like button as well as subscribe to the channel. Check out that link down below in the description of today's episode if you want to come join the trading community. With that said, have a great rest of your day, and I will see you in the next one.